Hello, everyone, and welcome to the InBizLV podcast, the podcast for business people, entrepreneurs, and people who are dreaming of owning their own business. I'm Mark Fierro, my co-host, an important man to know if you're in business or trying to get there, Evan Dickson. Evan is president of Nevada State Development Corporation, the leading development corporation, a gateway for small business in business loans. Emphasis on the word loan, small business loans in Nevada. Evan, thanks for being part of it.
Thanks for having me here, Mark. I appreciate that intro. That was very nice.
Well, we're going to have some fun. The one thing about your business that I can say without any question is that if you want to know what's happening in the economy in Las Vegas, find out what's going with NSDC, and you'll know exactly what's happening in the broader Las Vegas economy.
You know, a lot of that's true, and we actually handle the whole state, so we get, the fillings from Reno and everything. And when we're busy, small businesses are busy, and they're picking up new clients, they're picking up new revenues, and everybody's growing.
As an example, I remember when things first started really to gel, the first thing that came back was big tenant improvements and that sort of stuff. But then all of a sudden you started getting sales, like the one law office downtown. Not only did you have the loan, but they completely renovated the building and went from being this hideous monstrosity to just being gorgeous. And that was an NSDC loan.
It was. It's been an interesting dynamic in the change in the market, because we went through the recession when, everything was just slow and property values died, interest rates went down, and then all of a sudden a lot of people thought, okay, wait a minute, interest rates are down, property values are down. Why am I paying this rent? Let's buy a building. So a lot of people jumped on that bandwagon, and now we've gone full circle, and we're in a new system where now the inventory is short. Interest rates are going up a bit, and prices have obviously gone up a bit, but there's still a lot of deals out there, and it's still a good time for businesses to expand because they're growing.
That the inventory, as soon as the inventory starts going down, people start saying, well, our only alternative is to build. And that's real money, and those are real loans, and that's a real commitment to Las Vegas when you build ground up.
Yeah, and that's what we've seen. We've seen the market go from where people were buying existing buildings, and now they're as is and moving into them because they could find what they wanted. Now we're seeing more people buying maybe something that doesn't quite fit exactly what they want, but what they'll do is come in and, like what you were saying earlier, and totally renovate it and make it exactly like they want, or they'll go ground up because they can't find, what fits their business model. So.
Well, one thing that happens, as a business person myself, you go in and you run the business and you run the business and you run the business. And what is very easy to take your eye off of is, 10 years go by, 15 years go by, you could either have a big stack of rent checks or you can own a business outright. You can own the building outright. And then when you go to retire, you have something you can really sell the business with a building or parts thereof or some mixture thereof.
And we see a lot of that. I mean, as far as an exit plan for business owners, we'll see a lot of them where they'll sell the business and retain the asset in the building, and then they have income coming in from the rental on the building.
Yep, forever and ever and ever. One thing that I would say is it's worth taking the time to find out if it's going to work. In the old days, that was a commitment. Yeah, that was like you had to have all your teeth pulled, and it took a year, and who knows how much. Now, if somebody is straight up with you and they give you an idea how long they've been in business and what their accounts look like and what their bank account has been looking like, you can tell them whether or not they're going to qualify pretty easily, can't you?
We really can, and we've got a good team. We've got a team here in Las Vegas and a team in Reno, and if we can get the basic documents, the tax returns on the business, the background on the management, the background on the business in total, we'll do an evaluation, and usually within a week, usually we can look at it and at least give you an idea, say, okay, here's what you're paying now, here's what you can afford, and do kind of a pre-qual based on that.
That's great.
Subject to approval, obviously.
Yeah, and then
that's my disclaimer. Subject to approval.
Subject to approval. So here's the big thing, and that is, in the old days, when you think of a business loan, you're thinking of 15, 20% downstroke. That's a lot of, when you talk, even if you're talking about a $500,000 building, that's a hurdle that a lot of businesses may never overcome. But if you got decent credit, you guys can get 10% loans, right?
We do. The SBA 504 program, the basic structure behind it was a really smart plan set up by SBA. They set up CDCs, which are independent of SBA, and we facilitate the origination and servicing of these loans. But the basic program is we partner with the bank. The bank gets a first lien on the subject property at 50% loan to value, and then we come in through the 504 program and take a second lien for 40%, which the business owner comes in with 10% equity injection in that case. So you're looking at a $500,000 building, you're looking at $50,000 in a down payment on that building.
That's pretty amazing. I mean, because 100,000 is a lot of money. It's a crushing amount of money for most businesses. But $50,000, it's just like, well, we can get there in 6 months if we hold our breath a little bit. You can find it in the couch, not to discount that amount of money and not to respect 50,000, but there's a way to get there. It's much more attainable number. And then 2 years later, 3 years later, you look really smart because you're paying less than everybody else was in rent.
You do. And part of our joy is watching, because it is for small businesses. But the definition of small businesses is, people think, okay, well, am I a small business? It's really kind of grown. So we do businesses that net income over the last 2 years on an average, can exceed $5 million a year. So that's a pretty sizable business. Mm-hmm. I mean, if you have a business and your net income's over $5 million, then you're a pretty big business.
And some of the bigger buildings, let's talk about some of the larger transactions, not just your end, but all in with the bank and everybody else's. What kind of valuations are you talking about going for the ceiling, for the roof?
We have participated in a number of projects that are $20 million projects.
There you go.
I mean, we're capped out at a $5 million contribution on our side.
However,
but it does limit how much the bank has to come in with. And basically it makes the bank feel more secure on that loan because we're in a second deed of trust and we're picking up, $5 million of that project. So we're picking up 25% of it. Client's coming in with 10%. So that leaves the bank with 65.
No matter what happens, they're looking pretty good, unless there's something, the wheels just come off, which we've heard of before. I'm trying to think of what.
Yeah, that might have happened once or twice, at least once, and they're not too
distant past. Yeah. But one thing that has really changed is our friends in Reno. I remember years ago, Reno was synonymous. You went to the legislature, their leaders, it was synonymous with zero growth or very, very close to zero growth. If you haven't been to Reno in a while, it's exploding now. Your office up there is just doing crazy.
It is. It's we've done very, very well in Reno and all over the northern Nevada area. It's interesting because they really are short on inventory.
Yes.
I mean, and they're short on workers on the construction. To try and get construction done up there, it takes a little bit of time. So things are really booming up there.
And medical is real tight. I remember that medical across all types of medical is really small inventory, really tight inventory. You just did a really nice project up there.
Yeah, we did. It was a large project. I think we were, $3-4 million on that particular project. And it's beautiful. It was ground up. But it took us, a year to get it done, I think, with the construction and everything. But, yeah, beautiful project. That's what's fun about our business is watching the businesses grow. And we've had a number of clients that have come back. We've had one client that we did 4 or 5 loans for. So, I mean, it's fun to see those businesses grow. And remember that at this point in time, it was a small business, and this was a big step, and then all of a sudden over time it's become easier and easier, and they've just grown and grown, and it's like, okay, we need, we want to buy more capital equipment because we also do capital equipment.
Yeah.
So the larger stuff.
Yes.
So, yeah, a lot of fun to see that.
I was talking with a real successful printer in town for years, Larry Shuffler, and he, you habituate to it. It's just like flying. When you're first pilot, you don't go very high altitudes, and over time that doesn't seem like anything because you habituate to it. Anyway, he got the biggest printing place on the planet Earth, and I said, doesn't it just scare you to death at night? And he goes, I'm not that smart.
Yeah, there you go.
You just habituate to it a little bit at a time, and you get to manage there. One day there's another zero that shows up behind these numbers. Let's talk about the other end of the scale. Some of these small businesses are truly small businesses. Weren't even in business before. They could be executives in a similar business, and they can get credit for that as well, as long as they've got good credit.
Yeah, we do participate in startups. We have a lot of like special purpose properties where, someone's buying a car wash or something like that, or they're starting out. A lot of startups, they don't really look for the real estate asset unless it's a special purpose type property, but some do. And if they have the management experience, we'll underwrite it just like any other loan. So yeah,
Wow.
it's a good process.
So what's going on in Las Vegas now? So we know about the shrinking inventory without any question. We're seeing a lot of vertical, new ground up construction. What's on the horizon?
One of the most interesting things that I've seen from my perspective is, like I said earlier, how the dynamic has changed on what people are doing and what they're buying. We may not have the inventory, but you're not seeing a lot of those contractors go out there and take things vertical on a spec nature. You're seeing more of the deals we're getting now are where they are already under contract before that developer goes in and takes them vertical.
Wow.
So they'll basically go under contract to take it vertical, and then that developer will take it vertical and deliver that project gray shell to that client.
Wow.
And then the client will hire their own contractor to come in and do the TIs to put it the way they want, which is smart.
There's 9 months you don't have to worry about that are all already done for you. You're just standing there watching what you would have built anyway.
Yeah, and it's not going to overbuild
Yeah.
in any particular area. I mean, it seems like we're being much smarter about how we're doing it, which is positive for everybody.
Yeah, all the way around. One thing that happens with you that we've seen a number of times, and that is people coming back for a second loan, sometimes in very short order because they were so successful, and they all say, because we talked to them afterwards in the success stories, it was just easy. It was easier than buying a house. A lot of people that have done business with your team go, well, wasn't as hard as buying my home. I know that much.
And that's because we try to do the work. We try to help the people out. I mean, we have business development officers and loan officers, both here and in Reno, that take the time out to sit down with the clients, learn what they're doing, walk them through the paperwork. I mean, the old stories where SBA financing was so much paperwork and everything.
Yes.
We take a lot of that on. We don't really require that much more than your conventional real estate loan, which you need to supply to the bank anyway. So, yeah, it's a good process.
Lest anyone think that this is some sort of government handout, this isn't about taxpayer dollars, is it?
No, that's another positive on the way they structured this program. In the short end of it, basically what SBA does is we book all these loans, they put them into a pool, they take it to Wall Street, and then they sell that debenture or that bond on Wall Street. And that bond is guaranteed by the federal government. But that's the money that's used to fund our portion of the loans. So that being said, the only time that really there's any payment back from the government is if there was a default, because that bondholder's guaranteed those funds. Mm-hmm. But as part of your payment, there's also an insurance provision in there. Mm-hmm. So a portion of that goes towards this insurance to help offset that so that we run it as zero subsidy, which is part of the goal of the 504 program, is to make sure we're running it at zero subsidy.
Zero subsidy. I like the sound of that. I really do like the sound of that.
Doesn't come out of your pocket.
Yeah.
So you like that.
Yeah. Yeah. Whenever they figure out a way where it's not costing taxpayer dollars. So, and then your loans, they have one other fixed, right? Your end of the loan is?
We have 10-year, 20-year term, and 25-year term, and the loans are fixed for the life of the loan, for whatever it is.
Now,
fixed fully amortized.
See, I think there are a lot of people out there who talk themselves out of doing small business loans because they think, well, interest rates are going up. I'm going to get nailed here, 20% down. It's a lot easier than one might think.
10% down, fixed interest rate. I think we're just over, a little over 5, is what we'll be funding it this month on our 20-year
Look
fix. So.
at you. Yeah, just over 5. See, that's not so bad. You say it fast, it's not bad at all. And for guys like us that have been around for a while, remember when
Oh,
it was
yeah.
10, 11, 12, 15, 16.
That was before my days. But.
Yeah. So, to all of our friends out there, just so that you know, normally Evan and I will have guests on, but I thought NSDC is such an unusual business that I thought it would be good just to kind of get the dynamics down of what it is that you guys do. And we're going to be talking with some of your clients in the future. And as far as my entrepreneurial friends out there, if you have business, if you want to be on the show, give us a call. And we will see how this works. For me and Evan, it's time to wrap it up.
All right. Well, thanks, Mark. I look forward to it. And
We thank you. When this is going to be fun. We've had a radio career in the past, and
Yeah,
this will be
be a
fun.
good
I look
time.
forward to it. Evan Dickson, President, Nevada State Development Corporation. As I said, for all of you out there who own businesses, have that entrepreneurial spirit in your heart, or care about someone who does, remember to like and share the InBizLV podcast. This is our first time out. I was waiting for some major screw up, and I guess that's not so bad anyway. So anyway, if you know of anybody with an interesting story to tell, you can reach out and call us at Fierro Communications, 702-385-7300. Make it a great day, and see all of you out there in that great deal stream of American commerce. Have a good one.